Hello everyone, welcome to today's US Open Live. It is Thursday, September 28th, 10 minutes before Wall Street opens as always. I'm your host, Nikos Zabouras, Senior Financial Editorial Writer at FXCM. The US dollar loses steam today and its counterparts try to find some reprieve, and there was some volatility earlier after some US data. And of course, markets now turn to Friday's key economic releases from the United States mostly, but more we will talk about that. Of course, China's property sector woes persist as trading on the stock of Evergrande was halted again today, while Nike's quarterly results are due after Wall Street against a tough environment for the company. That's what we will be talking about today. But as always, before we begin, please read carefully through the risk warnings and the disclaimers. Once again, please read through the risk warnings and the disclaimers, and bear in mind that anything discussed here does not constitute investment advice and should not be construed as such. Having said that, let's get the ball rolling. So we're gonna start off with Euro USD. Not much to add from what we have already talked, but we'll go over the latest. Then we're gonna talk about the Hang Seng Index and the latest around China's troubled property market. We're gonna move to the Nasdaq. Then we're gonna talk about sports apparel giant Nike, whose results are due later today, and we're going to talk about what's ahead, including the upcoming PCE inflation report from the United States. Now, on the Euro USD front, we can see that the pair finds some reprieve today, just shy of the 2023 lows, 1.0481. And we could see further rebound, perhaps reclaiming the 38.2% Fibonacci for which we have talked about. But once again, it will need to clear key resistance cluster at around 1.07 to 1.079 for the bearish pressure to pause. And that doesn't look particularly easy. It will need a very strong catalyst. Now, despite this effort to recover, it remains exposed to new 2023 lows and to the next support at 1.033. It's I've said that before, that we're now at the peak of this reversal in the policy differential. So we're going to have to see how it goes, and incoming data over tomorrow will be factored in. But the pair is definitely in a tough spot, and it will need to break out some key resistances for that to subside. Now let's turn our attention to the Hang Seng Index. And so fear around China's troubled property sector persists. The poster child of the real estate crisis, Evergrande, announced on Monday it was unable to issue new debt as part of its restructuring plan, and today its stock was halted from trading in Hong Kong. Again, it had resumed trading just in late August after a 17-month suspension. And also within this week, the company reported an operating loss of in terms of USD around 1.6 billion for the first half of 2023, which was actually a significant improvement compared to a year ago. Authorities have taken some measures to support the real estate market, such as lowering mortgage rates on existing loans, and they have also vowed to support the broader faltering recovery, not just the property sector. But in general, as we've talked again before, they have refrained from bold stimulus. There are good reasons for that, because stronger monetary action would harm the already weak currency, and more forceful fiscal stimulus could threaten the country's credit ratings. But in any case, this piecemeal approach from Beijing has failed to inspire markets. So HKG 33 is running another losing month based on that, and heads towards the conclusion of a negative quarter. It reacted negatively to today's news around Evergrande and sets new 2023 lows, threatening the September 2022 low at 16,997. That, of course, would open the door to 16,127, but maybe it's early to talk about tackling that support. On the other hand, recent data showed that there may be some progress, some actually positive impact of the of Beijing's efforts to support the economy. Retail sales, for example, improved in August, production strengthened, and deflationary pressures eased. This may help the index contain its losses and rebound. However, a strong catalyst would be required for reclaiming the 200 period EMA at around 18,000. So there are important events coming up from China as well. We will talk about the upcoming stuff a little bit later in our session. Now let's turn our attention to the Nasdaq. The post-Fed blues continues, and the pair reaches the 23.6% Fibonacci of the 2022 low, 2023 high advance. There is scope for further correction towards the broader 14,090, 13,842 region, which is the 200 days exponential moving average and the 38.2% Fibonacci of its last rally. Now, of course, if we look at the broader picture, bulls can regain the initiative, but we'll need some good news from the incoming data in order to rebound and try to retake the 200 period EMA around 15,100. That would help it regain the initiative, as we said earlier. Now we're gonna turn our attention to sports apparel giant Nike, which releases its latest quarterly results at a challenging time today after Wall Street close. And I mean, at a challenging time in terms of how it does in the market, not the actual timing. Let's bring the chart as well forward. Here we are. So we said that it's a tough period, high interest rates, elevated inflation. These are factors that suppress demand for discretionary goods. We also have a series of worker strikes in the United States and the expected restart of US student loan repayments, and that can also have a negative impact. We had also written about that a few weeks earlier. Major US sports retailers and Nike's wholesale partners, Dick's Sporting Goods and Foot Locker, downgraded their revenue outlook for the August-October period, underscoring this adverse environment. Nike's profitability had taken a hit last quarter from these headwinds, and of course the continuing efforts to reduce its inventories via discounts, which had ballooned during the pandemic years. The bright spot was Greater China, because sales there rose 25% year over year and drove the overall revenues increase, outpacing other regions. However, the post-pandemic recovery, as we talked about a little bit earlier, is faltering for a series of factors: high youth unemployment, weak consumer demand, and others. And Nike offered conservative guidance for the soon to be reported quarter, expecting limited or no revenue growth. And of course, all these adverse factors that we talked about have translated into a very poor month for the stock and in general past few months. And actually in August it had a historical losing streak, and it now finds itself close to the 2022 pandemic, to the 2022 lows. There are some reasons for optimism, though. The firm expects a sequential improvement in its gross margins. Inflation has been moderating, even though still elevated, and the Fed and other major central banks may be close to the end of their tightening cycles, if not already there, while the latest data from China, we talked about it, offered some early signs of stabilization. Now let's round things off with what's ahead. We expect Fed Chair Powell later in the day. Of course, we don't know what if he's going to touch on policy. And tomorrow, US PCE inflation. Both current headline had ticked up in July to 4.2% and 3.3%, respectively, year over year. Headline is facing pressure from higher oil prices, but worker strikes, student loan payments, which are about to begin again, can ease pressure, upside pressure on the core reading. Also on Friday, we have the Eurozone preliminary inflation figures for September. Both measures are, headline and core, are above 5%, so there's definitely more work needed. Even though officials pointed to peak rates, they may have a hard time staying on the sidelines. Chinese factory activity over the weekend is due. Manufacturing PMI has strengthened recently, but has been in contraction territory since April, below 50, that is. And China's Golden Week starts on Sunday. This will affect, of course, stock markets and their trading, and it's a development that could help travel industry. It could boost the travel industry and consumption, of course. And moving on further into next week, the Reserve Bank of Australia is due on Tuesday. Policymakers have kept rates unchanged for the past 3 meetings, but they did discuss hiking the last one and did keep the door open to more moves. Although inflation has peaked, it remains high, and this week's monthly data showed an increase. So that's it from me. Nike, as we said, is due after Wall Street closes today, and then the earnings season will heat up over the following weeks. And of course, artificial intelligence will be in the spotlight again, and at the end of the YouTube video, you can find our analysis on some AI related stocks. And of course, key data on Friday from the United States and more over the following days. That's it from me. Thank you for joining me.